Hey everyone, I'm Joel Lim, as seen on Yahoo Finance, Business Insider, and MarketWatch. Today, we're exploring a trading instrument that's been gaining a lot of attention recently, the Deriv synthetic indices. If you're tired of the unpredictability of the real world market, this just might be the right thing you're looking for. Let's dive right in and find out everything there is to know about the Deriv synthetic indices. First things first, what exactly are Deriv synthetic indices? These are unique financial instruments designed to mimic real world market movements. However, unlike traditional assets, synthetic indices operate in a simulated market, meaning they are unaffected by real world events. This eliminates the usual volatility caused by factors like company news, government announces, or natural disasters, along with black swan events. Derivative synthetic indices are available for trading 24/7, even on holidays, giving you the flexibility to trade whenever you want. Another major advantage is the absence of real world market or liquidity risk. This means you won't experience unexpected margin calls and you can always be aware of the risk involved of your trade. Deriv offers plenty of variety for different volatility indexes to choose from volatility 10 to volatility 100. This allows you to choose your preferred level of risk. Now, there are plenty of pros and cons to the Deriv synthetic indices. Let's start with the pros. First is the round the clock trading. This is an obvious pro that cannot be missed. So, the synthetic indices market is always open, offering flexibility and convenience. And there's also accessibility. You can trade whenever you want, anywhere in the world. And the limited volatility and price gaps of synthetic indices are not prone to unexpected price changes, providing a more stable trading environment for you. And the only con here is the success rate. Since synthetic indices operate in a synthetic market, your success may vary compared to trading on the real world market. So, if you're ready to start trading derivative synthetic indices, simply Google derivative synthetic indices, click the first option here. From here, all you want to do is just click Get Trading, and then it'll get started here. You can start out with a demo account, which is what I have here. You'll get $10,000 of virtual money, which I highly recommend doing, just so you can get an idea of the Deriv platform. And to wrap up here, the synthetic indices trading on Deriv offers an innovative way to trade with controlled risk and without the impact of real world events. You can trade around the clock and choose your preferred volatility. If you're looking for a stable trading environment, Deriv synthetic indices might be the perfect fit for you. Thanks for watching this video and give it a thumbs up and subscribe to the channel for more information and tutorials like this.